Let's take a look at some information and charts on Balancer for Brave New Coin. So Balancer is an AMM DEX that allows you to create your own pools and then collect fees from the trading volume through those pools. They can be whitelisted, blacklisted, they can be permissioned or permissionless, very much a plug and play environment. They generate yield, rebalance automatically. Gas efficiencies, they do everything Ethereum needs to happen on chain. Here's what the pools look like. You can see TVLs, APYs. APYs greatly influenced by mining incentives, liquidity incentives, impermanent loss that you're dealing with here when we're 80% BAL, 20% ETH. When you look at that chart, it is probably the worst chart I've seen in the past 6 months. So you got to keep that in mind when you see APYs like this. Why are they this high, right? There's always a reason. And their swap platform website, is basic ETH standard plug and play with hardware wallet, software wallet, MetaMask, whatever you got. So there's no real hurdles there. I think the biggest hurdle is understanding the types of pools you can connect with and what impact that has on impermanent losses. Why would you connect to some of these for impermanent losses? IL is going to play a big factor here. You can structure this like an ETP as well. It just automatically rebalances. So it has a purpose. It has a use case. Maybe a bit of a niche use case, but it's there. This is the liquidity mining incentives. Started on 6/21. This is going to have an impact on price. It's going to have an impact on TVL. Anytime you introduce incentives like this, it's not good or bad. It's just you have to know why APYs are what they are, right? So you'd have to calculate, is this greater or less than IL? Is this greater or less than IL plus what your initial capital is? There's all sorts of math involved there. But they're at least trying to get people into the system with stuff like this. This also slowly introduces more and more coin in the circulating supply over time. If we look at total DEX volumes, Balancer in the aquamarine here over the last 24 hours generally has a very small slice of volume versus Uni, 1inch, Sushi, Curve, ZRX. It's way down the list, right? So maybe they need more integrations with other platforms. They did recently release version 2 in mid-May and may just need some time to mature as an option for people with an AMM or DEX in the conversation. At this time, Uni is so ubiquitous, it's just slowly eating everybody else. And these smaller fries down here are the first ones to go because the incentives are going to be smaller, the fees are going to be lower that you collect from the AMM side of things, and the incentives are just going to disappear relative to some of this other stuff. And if we look at volumes per day, Balancer at the bottom there, tiny blue sliver. So it still has a long ways to go as far as growth is concerned. And again, this is monthly, kind of the gray at the bottom here. Very small relative to everything else. What's really more problematic is TVL has fallen off a cliff since May. Trading volumes falling off a cliff. Transactions continued to decline since mid-2020. And users are basically zero relative to where they were. So they're going to need to do more on mining incentives or marketing or supply. I don't know. They need to do something to keep up with the Joneses relative to everything else. Because whatever they're doing right now, the market is saying collectively, no thanks. Transaction counts basically flat since token release. Nothing too crazy there. Average transaction values went to all-time highs with price. That's normal and have dipped considerably. NVT, which doesn't really make sense to use for ERC20 tokens like this, but NVT is falling, so that's at least some bullish silver lining. That's market cap relative to on-chain utility activity. Active address is down considerably. Again, this is just another way to look at all these metrics. These are, again, some of the worst metrics I've seen for any DeFi platform. numbers just tragically low. And moving to technicals, Balancer washed out faster and easier than anything else in DeFi so far. I keep saying for the past couple of weeks, it looks like everything wants to return to its yearly open, which Balancer has done so over the past couple of days. You can see the breakout points. You can see the volume down here relative to 20 plus. And it looked like it was going to take more time, but then it just had this parabolic downside where whoever was holding a bunch of coins began to capitulate. On the daily time frame, there is not a bear div here, meaning bearish momentum is not waning just yet. But I do like that it dumped the entire rise up. You know, that to me is very capitulation type of activity. If it wasn't a vacuum alone, I would be adding to this position on Enzyme, but because all of the other DeFi stuff still looks ready for big rollover to the downside, it's hard to get bullish on anything individually, despite this thing. I mean, it's gone from 72 to like 12, right? That's an insane pullback. Death cross here as well. So the more this can bounce around here and bottom, the better for upside in the long term. On the cloud, the daily cloud, there's a ginormous TK disequilibrium here, indicative of oversold conditions. And even on the 12-hour, there's the beginnings of a bullish divergence because RSI didn't make a lower low with price. So probably the earliest they'll jump back into this is when we see a bullish TK cross on the 12-hour, which may happen in the next couple days. I don't know, but trend-wise, this looks mega oversold. BTC, also no bull div here. Below all of this volume that it previously was consolidating in, below the 200, below the cloud, TK clamp disequilibrium, so definitely a pretty large oversold signal there. But the thing with Balancer is previously it's had massive TK disequilibriums that haven't really done anything. It just continues to sell off. So again, I don't know if this is a function of total coin supply relative to market demand or just some unlocking mechanism. I don't know, but the chart is telling me this thing's in trouble and has been in trouble holding, because it just can't hold on to anything, right? It can't hold on to any highs, sells off way easier than taking the stair step up. And basically hit all-time lows on the BTC pair. On the 12-hour, there is a bull div with a bunch of volume coming in at the lows relative to early, the beginning of the year, basically. Complete retracement. So it's hard to stay uber bearish this because it is at all-time lows. But looking at what it's done previously, it's just hard. It's a tough sell to hold on to this stuff. And here's BAL ETH, which looks, again, one of the worst charts I've seen probably this year is this chart. This is the daily. The fastest sell-off I've probably seen on anything. The deepest RSI I've seen on anything. This RSI almost hit zero. So it may be time to rotate into some BAL relative to ETH just based on this. This is telling you it's going to be hard to get more bearish momentum than the past couple months. Massive TK disequilibrium here. Mean reversion would take this basically a 2x to the upside. So it's early, there's no W, there's no reversal patterns or anything. I'm just looking at momentum, and it's unlikely probability-wise that this continues to sell off to the degree it has relative to ETH USD. And here's the 12-hour, which is crossing bullish on that TK cross soon. So that may be something to watch as well. If you're trading BAL relative to ETH and aren't quite comfortable knife catching just yet. But there is a multi-month bullish divergence on this because RSI didn't really make a lower low. So still the early days for Balancer. Definitely has a use case. And I actually like the plug and play, do whatever you want, AMM style type of things. There are fee considerations, IL considerations, mining incentive considerations, circulating supply considerations, total volume considerations relative to everybody else. Can Balancer survive over time being the smallest chunk of the pie I can even show on a chart like this, right? In general, will we see DEX consolidation, or will we continue to see DEX expansion? I don't know. I think it's harder to see expansion in a bear market than in a bull market, because these DEXs all thrive on volume, and when there's no volume, the smallest DEXs are going to implode quickest. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital and Enzyme.finance. You can send ETH or USDC to the smart contract here, or you can just watch what I'm doing. AUM, performance, allocation, all the trades I'm doing, all done through DEXs. We did have Balancer in here at one point. I cut it, let's see, 612 it looks like, 12 days ago. I had been lending it prior to that. But Enzyme's been great as far as, obviously, transparency. You can't beat it. You can see everything I'm doing. And you can see people going in and out of this stuff. So it's not like it's a Roach Motel where the money's just trapped. So that's all I have for this one. Like, dislike, comment, share, subscribe. Happy trading.